You've just changed your call at Barclays based on the developments we've seen recently in Brexit. What have you done?
Well, I mean, we think there's an improving news flow on Brexit. Obviously, there's still a lot of uncertainty, and the path to a deal is quite narrow. But we think there's a case for optimism, and we think the risk-reward to shift toward domestic exposure is getting more interesting here. We have seen a lot of negativity in the last 3 years, pretty much since the EU referendum on the UK asset and the UK equities in particular. And we think there is a case for UK domestic exposed companies to start becoming a bit more investable. So obviously still a lot of uncertainty, and we'll probably have to deal with very conflicting headlines over the next few days, but we think positioning, valuation are favorable to domestic stocks, and hopefully if we get a resolution of the Brexit impasse, that could improve sentiment and provide a bit of a lift to this very end-off part of the market.
Emmanuel, a very good morning to you, and you have made this big spin across. I want to talk to you about valuation of how the FTSE 100, which is obviously where you've decided to move away from in favour of domestic. But if you look at the FTSE 100 relative to Europe, it is the lowest in a decade. If Brexit is passed and if a mini deal comes to pass, how would the FTSE fare in that situation?
I mean, it is indeed the case that valuations are looking very cheap for the UK large caps, probably because there is a lot of weighting in commodities. Energy, metals are a big chunk of the UK equity market, and they look very, very cheap optically. Now, the index, the FTSE 100, is extremely leveraged to export. 70% of profits are coming from the rest of the world. So a stronger currency in the case of a deal, in the case of a positive outcome to Brexit, would somewhat counterintuitively hurt the UK equity market. So in absolute terms, we can see UK equities performing well, getting inflows in the case of a positive outcome. But in relative terms, in particular to Eurozone, we think the market will be constrained by the stronger currency.
Right, and that's interesting because I was wondering how much you think that Eurozone equities will benefit from positive news on Brexit, because Europe's worries aren't just about Brexit.
Yeah, I mean, I think there are a lot of issues facing or dealing with Europe. And, Europe is obviously a global economy, so it's been very impacted by the trade war and the uncertainty related to trade. And I would say that, in the last couple of years, Brexit has been a significant drag on sentiment. So if you look at the positioning on Europe, is extremely underweight. We have seen pretty much a year of outflows from European equity funds. Valuation relative to the US are looking very cheap, almost 1 standard deviation below the long-term average. So I do think that if you have both on the trade and the Brexit front some kind of improvement over the next few weeks, I think the investability of European equities could basically benefit, right? So as I said, the UK market is probably constrained by the prospect of a stronger currency in the case of a deal. However, the Eurozone market could benefit from a feel-good factor, as simple as that, and will not have to deal with this currency issue.
And I love some of the titles in your notes, domestic bliss, in regards to some of the positions. Can I ask you, we may have a deal that may come to this Parliament, and then the assumption is that we still have election risk. And the title of your polling is the Conservatives in the lead, but there's no clear outcome for an election that the Conservatives still lead, but they still lead in the battle. What's the concern if we go into an election? Would it embolden your call for the domestic market, or would it make you a little bit more cautious?
Well, I mean, as I said, I think there are still a lot of obstacles, in the UK. So first, we need to get the deal approved. Hopefully, we're going to hear about it over the next few hours. And then any deal that UK and EU would agree with would have to be approved by the House on Saturday. And again, it's not sure that we have a majority for that. And then assuming there is a deal finally approved by everybody, we'll probably have an election in the next 2 months, right? So still a lot of uncertainty, for UK investors. I would say at the moment, the main issue is very much about the binary outcome, deal or no deal. And I guess the main concern in the market is UK crashing out from the EU without an agreement by the end of the month, which will have a significant impact on the economy. So I think if we avoid the worst case scenario from a macro standpoint, I think the market will be able to shrug off, basically lower uncertainty on other fronts. But it's going to need to be a very straightforward, easy trade. But we think the medium term, risk reward is getting better, even though we need to go through a number of steps before having the full green light.
And just briefly then, I know it's the domestic stocks that you're sort of getting more positive on. Any sectors you prefer more? Is it the home builders? Is it the banks? Are there any others that people should be watching?
Well, I guess if you think about sectors which have been hurt the most by Brexit uncertainty over the last few years, and to some extent from the softer macro environment as well, banks, house builders, indeed, retailers, travel and leisure are probably the most important here. This part of the market is underinvested, looking very cheap on valuation. So any prospect of reducing uncertainty and eventually improving macro expectation would benefit the space.